Welcome if this is your first time visiting the channel. And man, we got to talk about this week. Highly volatile week. You see my portfolio now. It was just 2K plus of what it is now. The market has been real volatile. However, I did take advantage. And one of the things that I want to go over in this video is about the leverage that we have to be aware of our leverage. So if you can survive the drawdown, you can catch the rebound. This week was full of tech earnings. We had the Fed meeting Wednesday, the semiconductor weakness that we got to talk about, one of the weakest days in the sector since 2022, and broad deleveraging pressure. The lesson this week was simple: survive the drawdown so the portfolio is still standing when the rebound arrives. I'm going to be going over of the stocks that I did buy: DRAM, NVIDIA, Tesla, XMH. We're going to be talking about MU, and again, the Fed earnings that we had on this week. I am getting a lot of views, but because I'm not getting a lot of likes, YouTube is not pushing this out in the algorithm. So please do me a favor and hit the like button so this video can reach more people. Now, this is one of the most volatile weeks of the year. Particularly, there have been a lot of talks about the AI bubble, memory being a bust, the oversupply of memory. We have an oversupply and then we have a short supply. So it's been volatile, and mainly the CapEx spend. A lot of the hyperscaler stocks are spending a lot of money on AI, and investors really don't like that. So on top of the Fed meeting this week, people thought that the Fed was going to raise rates, but they decided to keep them steady and pause them. But SMH was down, SanDisk was down, Micron was down, the Keys was down. My main holdings were down: Tesla and DRAM. NVIDIA really stayed consistent throughout the pullback, but you can see right here, SK Hynix, that's the South Korean memory company, was down the worst out of all of them. They got as low as to 127. They just IPO'd a couple of weeks ago. DRAM had a 43% drawdown. MU had a 40% drawdown. SMH had a 23% drawdown. Tesla had like a 39% drawdown. So this week was definitely one for the books. And a lot of people got liquidated because they were over leveraged. And again, we had the Fed Wednesday. We had some earnings Tuesday. We had some earnings yesterday. Amazon, Apple reported, and the market is just digesting all of the components to whether or not they want to stay on the sidelines, do they want to buy, do they want to sell. And mainly being summer, you guys, the summer does not have a lot of volume. So this is why we are most of the time stay flat, but this week we did a real big drawdown. Over in South Korea, a lot of people were over leveraged. They were buying the AI memory stocks, and on this pullback, a lot of people got wrecked. $1.2 million in margin calls, 360,000 accounts got wiped because they were over leveraged. They were buying big at the top. They thought it was going to keep going up, and on this 40% pullback across the sector, a lot of people got rich, you guys. So this is why I like to keep my margin cap 28% at all times under normal conditions between my investments and me paying my bills every 2 weeks. When you're over leveraged, highly concentrated, and just buying at the top, when a pullback happens, and they will happen, when mean reversion happens, you're forced to sell at a loss. And if it draws down too deep in your account, you're forced to sell because you have been margin called. So 28% cap is my staple. I did go beyond 28% because I used this buffer right here, 28 to 35 to 40%, to buy the dip. This is what I did this week. I'm going to show you my buys that I did. However, I had to put insurance also. It really didn't move much. I maybe probably went up in value maybe 400 bucks because my put was 15% out of the money when I bought it a couple of weeks ago. So even though QQQ went down, my put really didn't move really. And again, like I said, rates held at 3.5% on the Fed. The dry powder I deployed out of my margin buffer is that I bought $970 worth of DRAM, 20 shares at $47. The average of what I bought $837 worth of Tesla, about 2.75 of shares, average around 305. The lowest Tesla got this week was around 298, which is a deep pullback they had missed on earnings. And Nvidia only about 2 buys worth 300 because my cost basis is still at 182, and I didn't want to pile in too heavy, raising up my cost basis. Each buy had a reason, not just the price. So, because I still think AI is just getting started, and me buying the dip as low as it was Tuesday, Wednesday, the next day it was just back, So when you have dry powder and you just take your time and you know how to use your margin, you can time your buys. You can buy in the fear. When most people are fearful, they sell, and they're selling to you at a lower price, and you buy those shares at a low price. The market today is being a little, so the buys that I do have, I mean the 570 on Nvidia, SPMO, I rotated out of VTI and bought it kind of flat. SMH down $15, Tesla down $1,000 because my cost basis is 359. Round Hill Memory, I'm down 1,300. Cost basis at 60 right now. DRAM is doing another pullback at 50. I got around $10,000 withdrawable for cash. And so far, the bounce has been good. Probably going to take my time going into August. September is known as Bloody September, so I expect another market pullback where we can position ourselves to buy the dip, to compound quickly, and to buy low, sell high. But in our case, we're not selling anything at all. If we do, we're going to rotate into other assets. So again, before you copy any of this, like I always say, margin is a loan, margin is risky. I keep my margin at 28%, just so it doesn't get out of control. I keep my expenses in check. I'm not buying uncontrollably. For instance, on Robinhood, I'll show you guys right now. I have about $20,000 worth of buying power. I'm not about to spend all that. I'm not about to go crazy with buying shares. I always have a plan. I'm sticking to my plan, and these are the 5 that I have right now. Still no dividend stocks because I have been making money trading, and I'll show you that this week was a real good week. I trade using the platform Quant Crawler, which is essentially you can route your strategy on TradingView to this and execute your trades for you. It's basically a AI bot. You give it your strategy, you tell it when to get in, when to get out, and it's basically making your trades for you. Okay, and then the other day on the 27th, I made 4,500. So I'm still building those accounts up. When I take my payouts, these will roll over into the brokerage account, and I will compound quicker and get to fire even quicker. So hope you guys are taking your time. I hope you guys are not being fearful. Have your plan in place. Know that market pullbacks happen. And let's go ahead and go to the chart right now to see where everything is at. MU is pulling back again. It recovered yesterday to 921. Now it's going back to currently at 828. So ebbs and flows of the market, still looking at buying SpaceX, but I wanted around $90. It's around 108. There's rumors that SpaceX and Tesla might merge, or SpaceX might buy Tesla. So kind of asking myself the question, do I want to own both? And if I do, how much will I have of each. Obviously, right now Tesla's in a deep pullback from its all-time highs. It's almost at a 45% correction. I bought in above around 300 of the buys that I just showed you. DRAM, which is the memory ETF sector that contains Micron, SK Hynix. Can't remember the third company, but it has had a deep pullback, and I think I think this is an easy double. So as low as it got to 44, we'll be back at 80 by the end of the year. So I'm anticipating the account size that I have now. This should be around 14K towards the end of the year. The 7K that I have, this should be around 14K towards the end of the year, based off this deep pullback going back up. And that's what I do expect to happen. That's why I bought some this week during the volatility. And Nvidia is just settling, just consolidating, I believe, for the next leg up. Let me go ahead and delete this so you guys don't have to see that. But yeah, you can see it's just consolidating. It broke out of this box, of this range right here, from here to here. It broke out for all-time highs at 236. Just came down, and it's just been, I think it's consolidating, building that momentum, building that pressure. And when we get a catalyst, it's going to shoot back off to the moon and past 250, thus bringing us closer to a fire. So if you guys have any questions, any suggestions you would like for any of the videos, please leave them down in the comment section. This week has been a busy week for me. And yeah, I hope you guys are having a blessed one. And I'll see you guys in the next video.